You were listening to ChartingWealth.com for Thursday, the 8th of June, 2017. The chart that is on our screen right now, for those listening by audio, I'll explain to you what we're seeing. We are seeing NYXBT. It is the New York Stock Exchange Bitcoin Index. It tracks Bitcoin. And we have worked on this chart and we have identified a chart that actually works. We've gone back in time through trial and error, and we have found over and over again our chart tracks it accurately, tells you when the market's starting to drop and when it's going up. Is any chart perfect? No, but we use the True Strength Index with the settings of 3 and 9, and we also use the 2-hour chart. We used our Heiken Ashi candlesticks, and we've been able to chart Bitcoin. Now, do you want to go out and buy Bitcoin at this point? We are not a stock calling service. We're darn sure not a Bitcoin advisory service. But when you see things listed as in the Wall Street Journal as reaching a new high, that is probably not when you want to buy. How does a rumor on the market go? We've said it several times here on the show. You buy on the rumor, you sell on the news. So again, careful, be very careful. But for those of you who want to know more or fascinated about Bitcoin, want to know more about how to read this chart, training to only those people who subscribe to our email. And how do you do that? Well, you go to chartingwealth.com and you sign up there. You put in your first name, you put in your email address, and we will be providing that information to those folks only. So if you are interested in that, by all means, please go and sign up. Now, we're going to get into our training for the day. We're going to switch from our Bitcoin chart to our special chart that we use every day in the market. And we're going to switch over to the S&P 500. Now, don't forget, before we jump right into that, remember the quarterly training that we've talked about? For those who are interested, long-term investors, financial advisors, our quarterly chart that we have designed for the S&P 500 is unbelievably accurate. You can go back 20 plus years and you can see our chart guide you up, tell you when to get out when the crash was coming in 2001 through 2003, puts you back in mid to late 2004 for the run up until 2008, takes you out when that crash starts to occur, and then puts you back in late 2010, early 2011 for this latest run-up. It is beautiful, my friends. You want to know more about this? We're providing a special training. We got to hear from you. You have to first be a person who subscribes to our daily email. In addition to that, you need to email us, cw@chartingwealth.com. Tell us why you want to take the training, what your background is. We want folks who are serious, long-term investors, financial advisors, people who are really going to put this to use. We're not going to simply go out and share this information with any and everybody. What does it cost you? Nothing. But it's going to be a great training. If you're interested, we do need to hear from you, and you do need to be a subscriber. So write us, cw@chartingwealth.com. Tell us a little bit about yourself and why you're interested, and we will be happy to consider you for that training. We will be having that out over the course of the next week or so. So sign up now before the slots fill up. cw@chartingwealth.com. So jump right into what's going on in the market. Remember, we had our weekly vertical crossover going up on Friday the 2nd. We had our entry point on Monday morning at 10:30 at $244.06. What have we seen happen since then? Well, as we look at our candlesticks on the weekly chart, we can see that the average pace Heiken Ashi candlesticks have moved up. Derivative oscillators moved up. Problem is the PPO is sliding sideways. Not a great sign, particularly early on. We don't like to see that. What's our 2-day chart doing? Well, it's continuing to move up just like it did over the last, 6 days? And again, derivative oscillators continuing to move up. We have a red candle that's been drawn over the last day. That is some concern. Where price ended, price actually hit a high through the course of the day. And let's zoom into the 4-hour chart. And we can see we were worried last night about that 4-hour chart crossing over going down. It has done so. A little up in the morning, then crossed over going down in the afternoon. Now, the S&P 500, for the record, was up 0.19% for the day. We do not like the downtrend we're seeing for the Heikin Ashi candlesticks. Those who don't know what Heikin Ashi is, it means average pace in Japanese. It's a different type of candlestick. We think it's a lot more accurate, a lot more easy, a lot easier to see. You want some good training on that? Go to our website. Go to the training on Heikin Ashi. I saw somewhere the other day, we've had like 34,000 people view that. Is just incredible. Anyway, great training there. It also has crossed over on the derivative oscillator going down. Those are not good signs. Now, the high throughout the course of the day was $243.92. What is that? That's about 12, 14 cents off what our buy-in point was on a stock, well, on an index it sells for $243. But that still concerns us because we want to see, when we have a weekly vertical crossover, we want to see stuff moving up rapidly. We're not seeing that. So you might want to look at a point jumping out on that. Now, the 2-hour chart's not telling you that yet, nor is the weekly, but the 4-hour is giving you a note of caution. So if you don't want to get out in the morning sometime, at least at 10:30, keep an eye out as to what's going on, because you don't want to ride this baby down if that weekly vertical's not going to work for us. Weekly vertical crossovers usually do, but of course there is no guarantee. What we want to do is maximize returns and minimize losses. Speaking of maximizing returns, let's talk about a weekly vertical crossover that worked like crazy. That was one that occurred on Friday the 28th on the Qs, QQQ. I'm sorry, that was the 28th of April. So we saw during the month of May incredible up moves. The Qs is continuing to go up another 0.39% for the day. We bought in somewhere around 136 or so, and we have seen the move up now 143.30. Just continued incredible movement as we look at that chart. Derivative oscillators continuing to gain energy. PPOs continuing to go up. Price percent oscillator. We look at the 2-day chart. Still looking nice. Price movement still above both the 2-day, well above the weekly trend line. Let's zoom in a little closer. And again, we start to get a little worried when we see our 4-hour chart starting to cross over. We want to capture all of our gains. So again, on the Qs too, maybe after all this time stocks have peaked. We don't know. We're not seeing those alarm bells yet in the 2-day and the weekly chart, but we don't want to lose our gains that we've had, such incredible gains. And again, you can let it roll back a little bit because we've made an incredible amount of profit. And again, you don't declare your profit until you get it, but we've seen incredible appreciation, let's call it that. But you don't want to lose that. So pay attention to what's going on that 4-hour chart. That may get you out only to get back in later. So again, the Qs has been wonderful to us. We'll continue to keep an eye on that. What do we see going on our 20-year bonds, which have gone up substantially and very beautifully? Again, with that weekly vertical crossover occurring all the way back in February. That 2-day crossover occurred on the 19th of May, and we've seen for the last going on 4 weeks now significant up movement. Derivative oscillators continuing to move up, and the price percent oscillators looking beautiful. If we look at that 2-day chart, what do we see? Well, it's starting to slide sideways on us. We're getting a red open box with a wick on top, which again, we're seeing price movement now drop down to the 2-day trend line. So that's a bit concerning, down 0.5% about for the day. We look at that 4-hour chart. What have we seen? Well, we've seen that crossover occur. So again, we've had great price appreciation. We have had, rotation over and then movement back up. So again, don't lose the profits that you've made. Pay attention in the morning now that this box has crossed over, and that's been confirmed on the 4-hour chart at around 10:30. If you have the time and ability to do so, check out what TLT is doing. Why 10:30? That's when idiot hour is over. Those of you who've been following us a while, you know what idiot hour is. Please go to our trainings online at chartingwealth.com to learn more about idiot hour and why you enter at certain times and why you only place limit orders. We never do market orders. Market orders are for people who want to act like fools. Now let's go to gold. Lastly, down 0.53%. That's over 0.5% for the day. Now we had that huge run up yesterday. What do we see going on? Well, of course, gold since late January has been on a weekly vertical crossover going up. We had a 2-day vertical crossover happen around the 26th of May. And of course, we've going on now about 4 weeks of continued up movement and nice candlesticks. We continue to see, hey, the derivative oscillator just flipped over into the green. The price percent oscillator is continuing to move up. Zoom into the 2-day chart. We see that the derivative oscillator maybe gained a little bit of energy, but the market continues to move up there. Price movement still well above the 2-day and the weekly chart. But of course, what's our prescient chart? That is the 4-hour. And of course, it started losing some energy. This 4-hour chart, those of you who've been following us a while, you know it is your trader chart. You can do everything on it. It seems to work time and time again when just that 4-hour crosses over. Ride, baby, ride. So pay attention as it starts to move over. It's done those things before. It's moved down, then bounced off that red signal line at least twice over the last few weeks. So watch it, be aware of it. We had that huge day back on the Tuesday, the 6th, where there was a massive move up in the morning. It could be digesting that. But again, if that 4-hour chart crosses over going down, probably a good sign that you want to take your profits and run and wait for it to bound back up again and jump back in. Now remember, we're not a stock calling service. We're an education firm. We want you to practice with us, learn all the things you can from us, from everybody else. And when you get good and you can do this stock charting accurately and you practice. Now those of you who are just listening, you're wasting your time. You might as well go watch TV. If you are listening and you are practicing, that is, you're filling out your daily market worksheets every day. We have training on how to do that. Daily market worksheets are available to everybody who subscribes. We send you notes, a PDF. There's a PDF attached to the email that we send you that has embedded in that email, of course, our video. You will get a PDF for the daily market worksheet, the weekly market worksheet. You fill that out once a week. That's basically your Monday market worksheet. And we send you a trader sheet that you can print. What that does for you when you fill that is it helps you track your trades. And again, just jotting things down and hoping to make a profit and not having a real trader manual to go back and look at is just not giving you all the training you could have for the same amount of time. 10 minutes a day, that's all we ask. Folks, we love you. We appreciate you being with us. We want you to practice with us every day. We want you to empower yourself and learn how these markets really work. You don't have to be on Wall Street if you'll practice with us every day. We are not here selling outrageous training courses, making crazy promises. We just want to show you how these charts work. We want you to study them with us. We want you to help us when you find things that are great. The reason we switched over from the MACD to the price percent oscillator is because a student pointed out how much better that was than the MACD, the moving average convergence divergence. So again, we're willing to listen. We're willing to go in there and practice and change things. I mean, the bottom line is we want to accurately predict movement in the market, whether it's the S&P 500, whether it's gold, whether it's bonds, whether it's the NASDAQ 100. It's all about making the right decisions, when to get in and when to get out. It's just that simple. And my friends, just that complicated. God bless. Thanks for being with us. Let us hear from you. CW@chartingwealth.com is how you can write us. And again, go to chartingwealth.com, sign up for this newsletter. It could be the most important thing you do to secure a wealthy future. God bless from chartingwealth.com.